So I'm going to talk about Venezuela in the context of this project, and you'll see that kind of my plan is going to be first to give you a little bit of a perspective, kind of development perspective, because I think Venezuela is interesting to see it in terms of also how the economy has been doing, and essentially these two big periods, a big catch-up in terms of GDP and then a huge collapse. But it turns out that this focus period that for which we have systematic data is going to be 1960 to 2005, where kind of it all occurs in this downfall. And then as I'm trying to update this data, of course, the case of Venezuela is becoming more interested by the minute, because there's a tremendous process of in some way crisis that cash flows in some sense that is leading to very high inflation. And I don't have the systematic data to assess it fully, but I'll give you some pictures that I think will give you a perspective of what may be going on there. So Venezuela is very different from the rest of the Latin American economies in the sense that Venezuela hasn't gone through major crises or have had periods of hyperinflation and things like that. Maybe we'll have the first one in the next year or so. But you will see that there are periods in which these relationships of kind of money growth that had to be restored and inflation will appear very clearly in those brief periods. I think one of the main reasons why it's different is that really Venezuela is kind of an oil-dependent economy, and at different periods of time, oil prices have adjusted in a way that have allowed the economy to kind of recover without having 10 years, 12 years of deficits running together. You'll see it in the data. So just to put it in the context of development, so this is GDP per capita and the real international dollars, and it's relative to the United States. Some of the, I think this kind of paints the picture of kind of the situation of catch-up and decline, but it might be also interesting to look at it in an absolute term. So, but the bottom line is if you go back, so these are numbers from Madison, where you can really go much farther back from 1950. But essentially from 1900 to about 1920, Venezuela was roughly 20% of the GDP per capita in the US. So kind of in relative terms was just growing at about 2% per year. And then in 1914, oil was discovered there, and there was a huge process of expansion of the oil activity in Venezuela. Most of it was done by foreign enterprises. So at the time, Venezuela was very open to foreign investment and a fairly open economy. So that led to a process of huge investment and huge catch-up in GDP per capita. That you can see here, but just to see the numbers, so this is 20% of the US, here is 90% of the US per capita income. Okay, so huge catch-up in per capita income. What's interesting too is that this is about 1958, where you can trace the peak, and this is very different from the perspective you get when people talk about Venezuela. They say, oil prices, the oil price shocks that started in 1974, and that's kind of the demise of the economy. But really, the decline of the economy started much earlier than that, and I think it was accelerated in 1974. It's a little bit of a story for why that may be the case, but certainly the decline started earlier. Interestingly,
what happened after 1940? What was that dip in 1940?
This is the World War II. So this is mostly the U.S. Yeah, exactly. Yeah, post-war.
But that's too big to be only that, right? You're going from 0.6 to 0.3. The GDP in the U.S. didn't go up by 2, so there must be something else going on.
Yeah, I'll check. Yeah, well, I remember looking at the numbers. Basically, the war growth. Yeah, the denominator is changing.
It clearly goes to 45, so that's
yeah.
recovers.
So basically from 48 to 58, there is a dictatorship, and this dictatorship in Venezuela actually was one where not only they continue this program of a lot of investment in the oil sector and open to foreign multinationals, but they had infrastructure projects. So this is a period where like whole towns were created, schools, hospitals, and the big investment projects, highways, happened during that time. If you went to Venezuela in the late 50s, relative to other countries in Latin America, the highways, the public infrastructure was really off chart relative to other countries in the region. If you go today, I don't think you get the same perspective. And so a huge decline. So now it's about maybe about 20%, 30% of the GDP per capita. Okay, so this is what's going on during this period. Oil shocks started happening in 1974. And you see that a lot of the perspective that I'm going to tell, it has to do with the oil and how that really connects to the fiscal side of the economy. In 1976, the oil company was nationalized. This is a process that started much earlier, but was effective in 1976. And so the oil company sells all the dollars that it gets from the sales of oil to the government at a predetermined price, and that really kind of determines how fiscal policy really interacts with sort of the whole cycle in the economy. Okay. So two things. So then here's the real GDP.
How does it work? Just clarifying
Yep.
question, because I thought until recently the oil company was fairly professional.
Yeah.
They did their stuff and then they just transferred the profits to the government.
Yeah.
Or was it that the government used it as its own?
Yeah. So really,
cash,
right. So not so much as today. So really, there has been two periods, but once this company was nationalized, basically this really put a constraint in terms of the potential investments for the company. But it is true that the company was operated in a fairly professional manner. There was, probably the best minds were in the company. People who had gone abroad to study. So there was a company with high human capital, was very well run, very few accidents. But it was constrained in terms of the expansion. And this is interesting because if you think about 1974 going forward, and the capacity that this economy had to potentially invest in expansion programs, it was fairly limited. To give a little bit more context, so Venezuela discovered reserves throughout this period from the 70s on. Later on, I'll have a picture of that. But to the point that if you look at current production levels, Venezuela had more than 200 years worth of proven reserves of oil, and yet Venezuela was one of the active members of the OPEC cartel, and which had an objective of kind of keeping prices high, and even if you had to restrict kind of production levels. And so that was sort of, at some point it became inconsistent with what an optimal development strategy should be for Venezuela, because given the reserves that it has, it should actually be trying to promote low prices, but capture markets and produce more. The second thing is that most of the production is heavy crude oil, which is less profitable. And there were a lot of investments that could have been done to generate more production of the more profitable oil that requires significant investments that were not done, or diversify to more refined products, which Venezuela did not do a lot at the time. So this first period, the company was very well run, but it didn't invest, I would say, in terms of optimal levels, both in terms of increasing production capacity as well as diversifying to more profitable products. And then since Chavez, this is more recently, the company became very different. So it became a company that also served the purpose of social redistribution. So all of a sudden, many of the supermarkets to distribute cheap food are operated, and the distribution systems are operated by this oil company. This oil company was very efficient, so that's why it was chosen to be the company that was going to implement many of the social programs. But it certainly also affected capacity to operate in other dimensions. Accidents have increased, so accidents have increased, operational capacity have diminished. In 2002, there was a general strike that was supported by some of the oil workers. And at the time, the company went from 40,000 workers to 20,000 workers in like less than a year. And most of the workers that left were the very high human capital individuals that were removed basically because they supported the strike. So all these things really come together to go from a company that was well run but were constrained by this capacity to reinvest in the company to a company that now is doing lots of other things that are kind of outside their objective, and also with a workforce that is much worse than before.
Just a question, what is the share in GDP of oil production?
It's about 20%. Yeah.
Because this high standard deviation of GDP, the trend of GDP, is related to...
Right. So, okay, so now let me go to this graph. So this is real GDP per capita, the blue line, and the actual data, and this is the kind of the HP trend. So what I wanted to show here is that, GDP, the oil GDP is about 20%, but as I say, a lot of the transmission mechanism has to do with how oil prices affect the oil revenues and then how that affects the government. So that's the way this goes in the cycle. And it is really dramatic if you look at kind of cycles prior to 1974, which was about 2.1%. So like in the US would be about 1%. So still high relative to kind of a developed economy. But if you look at the cycles after, at least the average in this period is 5.4%. So the cycles became much wider after the first oil shocks.
But oil production is highly stable, or?
The oil production is highly, yes.
This is just a transmission
Yeah.
mechanism from price shocks to the economy.
Yes. Yeah, true. As I say, it's a highly oil-dependent economy. It doesn't show up in the GDP, in the impact of the GDP, and in fact, the oil production is fairly stable, but it's kind of how the revenues kind of transmit through the entire economy. I mean, I guess these numbers are not surprising for Latin American economies. The volatility of these economies is much higher, but you can really see it here breaking in these two periods before 1974. So that's one of the themes, how the oil prices really affected the economy. The other part, which I think is more important to me, has to do with what I connected earlier, that really when this democratic government came into power, I think they sort of copied this public investment type program, and they took it to the next level. But in 1974, the total amount of resources that the governments had to do programs, to do something, increased tremendously. So the amount of resources that was going through non-market mechanism increased tremendously, and that to me created a lot of problems in terms of how those resources were allocated.
So,
yeah.
You mentioned these regulations of the cartel, the OPEC.
Yeah.
So in the hypothetical case that it was not nationalized, so oil company, do we have kind of a counterfactual how the production of oil would be different? So would it be
Well, I don't know, but for sure, I don't have a graph. I don't think even at the end I will have a graph. But essentially, because of this constraint on reinvesting in production capacity, Venezuela didn't if you look at over time, the production capacity didn't change that much, and in fact has declined quite a bit in the last 20 years, right? Now, this is an economy that has discovered reserves of oil in a manner that, you know, like if you make projections based on kind of potential, this production capacity should have been much higher, probably levels of Saudi Arabia. And in fact, in 1989, there was an attempt of kind of a market-oriented reforms, the second presidency of Carlos Andrés Pérez. And there they had a program to kind of reinvest in the oil industry and invest in production capacity, to move it from about 2.5 million barrels a day to about 6 million barrels a day, which was consistent with levels of reserves and levels of kind of production capacity that you see in Saudi Arabia. But that didn't materialize, and so production has actually declined since then. Later on, I'll show you a picture. You know, these strategies, of course, could depend on other elements, but what is certain is that these fiscal constraints really affected how the company operated in terms of future production. Okay.
There's a huge increase in oil revenues just after the oil price shock.
Yes.
But then it falls dramatically. Why is that?
Yeah. So. Let me show this picture. So this is the government revenue over GDP for the time period 1960 to 2005. This is the total. And I guess you see the two things I was mentioning. So things, you know, before 1974, fairly stable, right? So government revenues to total GDP about, you know, around 20%. But, you know, become a lot volatile. So the contribution of oil revenues to the total, in average, is about 60%, but it really increased in this period. And then there was an attempt to kind of diversify that in the economy. In particular, that program in 1989 had an adjustment on the way the non-oil sector was taxed. Mainly the taxes were always there, it's just things were not collected. There was an effort, and you see that in fact the proportion of non-oil revenue increased quite a bit. And so during this period, the oil contribution is about 50%. If we look now past 2005, we have kind of reverted back to the old days, and perhaps worse, where the revenues from oil are now more than 60% of the total revenues. So you were asking me about this drop, or?
Yes. I understand the increase, but not the drop.
The price came down, right?
Yeah, the price. So I don't have the price, but the shock was.
There are
so,
two shocks, one in 1973, another one in 1979. So the reason why the decline.
Yeah, and then so they went up. But so this, you know, the oil price went from about a historical $2 a barrel for a long period of time to about 7, and then 14, and then there was another one in 1979. So it's just but again, if you look at the connection, you see the volatility of the oil revenues, and you know, production levels are fairly stable, exports are fairly stable. So it's really this connection of kind of oil prices and how it transmits to the fiscal side. This is the expenditure side. Again, now here I'm dividing the total, and then there's the primary expenditure, so it's kind of devoid of these interest payments. And again, you see prior to 1974, fairly flat, fairly stable, and then, you know, starts to move. Okay.
15 minutes.
I have 50 minutes left?
Yeah.
Less? Okay. So I guess differently from other economies, you see that here I have the total deficit. This is the government, the central government deficit. It's not total government, but the central government. And then the primary, so excluding the interest payments. And so what you see is that, like there are as many surpluses as there are deficits. And so there's a lot of volatility here, but you don't see this pattern of kind of several years running deficits, and that's why inflation has not been as severe as in other countries. Now that has changed since 2005. I'm going to show you that after 2005, we have seen deficits that are actually, as a proportion of GDP, much above 6% in the later years. Yeah, sorry, up there. But we're talking about 17% in the last 3 years or so.
I have a suggestion for the next iteration of this
Yeah.
paper. I think that it would be so much more informative if you had the oil price, some oil price overlapping every chart.
The oil price overlapping with the chart. Yeah, I have the series, but yeah. Okay. So on that. The way this is done in Venezuela is that it includes the central government and some public enterprises, but not all. So in particular, it's not going to include this big one, the PDVSA, and it's not going to include these financial institutions, okay, the central bank or other public financial institutions. And then debt is really classified as internal or external depending on who holds the debt, residents or non-residents. Most of the debt is registered in international financial markets. And then there is this classification of the short term and long term, but really the majority of the debt today and historically has been long term. So I'm not gonna make that distinction in the analysis that follows. Okay. And then there's really no index debt. I think this is also related to the fact that there hasn't been some severe historical periods of inflation, so there's really no indexation on wages, on contracts. You don't find that in the Venezuelan economy. Okay, so debt to GDP. So the blue line is the total, and then this is the internal. So that's what I was saying, that the majority is just external debt. And again, it's interesting how after 1974, kind of all revenues going up, debt increases. And you see it after 2005 too, because now we have the oil prices went to now $100 for several years, and the debt just skyrocketed as well.
Big drop from 70 to 30 in 95, 96. Is there a restructuring?
There's some restructurings, yes. There's one in 86 that had to do with the way it was repaid. And then there was one in here, that was the financial crisis. Yes.
Okay.
Yeah, you can trace them. Actually, that's interesting because that's one part that you'll see that when I do the budget equation, I'm going to have one of the big elements here is going to be the transfer, which includes these extraordinary transfers that I think are often in these Latin American economies. But in Venezuela, that term is huge because a lot of these transfers are actually transfers to some of these other public enterprises. But some of the transfers would actually reflect some of this restructuring that should be accounted in the other terms, but it's hard to really do it. Okay. But I think that really will affect maybe the perspective on those particular years where that happens. So that's a caveat on my.
Sorry, the internal debt is related to where the owners of the titles?
Yeah.
It's not about the currency.
No, basically everything's US dollars, yes. Yeah.
If I understand, the price of oil is very, very low, and there is an implicit transfer there, which is part of the deficit.
You mean the gasoline, the internal?
And it has to be a huge number that is part of the deficit that's not being computed.
Correct, and I'm going to have that in my transfers. But I would argue that during this period, those implicit subsidies, but it won't show up as a deficit because it's not like at least until this period, it's not like the company has been losing money, but there's an opportunity cost.
Yeah,
But this is interesting because if I go from 2005 on, the government is actually, this is so bad. So he's talking about the price of gasoline, which is distributed and retailed by this oil company, which I don't know what the ratio is now, but it's something like you fill up the tank of a car with less than 5 cents. Okay, that's the extent. So the price is so low that actually they don't recover the cost of distributing so it's not just the opportunity cost of selling in an international market, but just the distribution. And it's aggravated because the consumption domestically, I'll show you a picture at the end, has grown a lot, mostly because it's being smuggled to Colombia. It's being smuggled to Colombia. So yeah, people may be driving a little bit more because it's so cheap, but a lot of it is being smuggled. And so that has actually reduced the capacity, and so there is actually a deficit that is being imputed. But that's not going to show up in the deficit budget, it's going to show up in the transfer. Okay, but I think that is really more important for the later. Yeah. So I have, so this is, well, you can see, after 74, really external debt increase associated with the exports, and then there was just some accumulation of reserves as well. You know, the service to this debt became problematic in these periods that we talk about, where there was some necessity. You know, Venezuela has never defaulted on the debt, which is interesting to keep it, or defaulting actually, you know, not paying. But there was this renegotiation here in '86, and then in the financial crisis as well. Okay, and even today, even with everything that's happening today, Venezuela continues to make payments to foreign to these bonds. And you may have heard a big discussion that Ricardo Hausmann, he made a comment that the government was actually defaulting on the consumers because basically now the government is not giving dollars to do the typical imports, but it continues to make payments on bondholders. And so there is a default in the economy happening right now, but it doesn't show up in kind of these statistics. In terms of exchange rate, things were not that fixed exchange rate for a long time, and then of course it became more of an issue here, and you know has skyrocketed the problem since 2005. So it becomes a bit of an issue how to evaluate some of these terms, because you have to kind of value dollar things, and you know if you use the official rate, you get a completely different. In certain periods, you get a completely different picture. Okay. In general, I try to use market rates rather than the official rate. And then this is the picture of inflation, fairly stable, and then you had these peaks. 1989, that's when these market reforms occur. So a lot of this inflation is really the fact that there were adjustments in public utilities, prices of all kinds. So probably part of this inflation should actually be attributed to some of these years as well. Price controls, today there is a lot of price controls, and a lot of this inflationary process, what you see is what the people don't find the goods in the shelves, but it's not going to show up in the statistics. Moreover, when you look, I think Venezuela stopped producing inflation statistics in February of this year, and that kind of tells you that those numbers must not be very good. So the budget accounting, so I'm not going to go through the terms, but basically, so these are the terms that you're familiar with, that you can decompose these terms in terms of the internal debt. This is the sources of financing. So through internal debt, external debt, money issuing, and seigniorage. Okay, so either through growth or inflation, and then you have on the other side kind of the the return to the two debts, and then deficits and transfers. And here, the transfer is going to be kind of the residual to make this equation work, and it's going to be a very important term. And as I say, some of this transfer in certain periods should be attributed to these terms in the renegotiation of the debt, but that's kind of very tricky to do. Okay, but you know, some of these transfers are kind of very easy to see where they go. So since 1974, even though the government created what's called a stabilization fund to try to isolate the domestic economy from these oil price shocks, they created that but never put any money. And so instead what they did is they invested heavily on these big public enterprises, so aluminum, steel, big projects. And so you can, and these companies did very badly. One, because they were not necessarily the winner sectors, but also because operationally they were, you know, deficit-run companies. And so a lot of the transfers can be traced to some of those public enterprises. So here are the terms. So I'm plotting each of these terms here for the kind of the sources of government funds, and then I'll do the same for the uses. And so I put this in the same scale. So you see, so it may be interesting to kind of blow it up so you see more the kind of the individual periods. But this is just to give you a perspective of where the important items came. So you see kind of external debt being fairly important, some of the internal debt as well. After, nothing very interesting before 1974, but after 74, those two terms are very important. And this is very different, I think, from a typical Latin American economy where you see that these terms are the terms that finance this economy. Venezuela always had the capacity to go and borrow abroad. And even, I think, if you look at the last year or so, you start to see that the government can no longer do that, and it's using these terms more. So I think that's why it will be interesting to look at it. But prior to that, Venezuela always had a good capacity to borrow internationally. So it hasn't been severely constrained. And then that obviously shows up in terms of how inflation has evolved. And these are the kind of the contributions in terms of the return to internal debt, external debt, the deficits, which again is important in some periods. I mean, here you have a band of about 5 minus 5%. So some periods is relevant, but nothing really systematic compared to other Latin American economies. And where you see the big terms are these transfers, which become huge, kind of in the 80s and 90s. Yeah.
About the transfers, that is the residual.
Yes.
What do you think about the size? Because in Chile, we are working on that. Sometimes it's as big as 30% the residual, so it's pretty big. So, but that is in times where crisis hit. For example, changes in nominal exchange rate, we have this residual big. So
yeah, no. Here I think in principle I've collected the data for some of these companies, like I can pinpoint some of the big public enterprises that I think are behind this. And so ideally you attribute this to the deficits. So, and within some periods I can show you that in fact these transfers can be accounted, big chunk of this transfer can be accounted for by an appropriate allocation of I will call it extraordinary transfer to these public enterprises. So I can't do it for the entire period just to reduce the size of this and then appropriately allocating the other terms. But at least it gives you an idea of where the source of some of these big spikes come from. Okay. And so, this is basically separating some of those numbers in terms of the subperiods, but I think I only have a few minutes, right?
Actually, it was wrong before. You have 10.
Ah, okay, right. I thought you were.
I screwed up with.
I just didn't know where like the half an hour. This is the fastest half an hour ever.
Yes, it was.
Okay. Okay.
When you get old, that happens.
Okay, so let me show you some. So that's with respect to the kind of the period until 2005, and I think these later periods, the Venezuelan economy will look much more closely to a typical crisis in other Latin American economies, in the sense that the government is resorting to inflation and money creation as a way to finance their operation. And so some of this you see, this is kind of comparing, I'm taking some of these pictures come from a report that Francisco Monaldi did for an energy institute in Columbia University. He's a Venezuelan economist that is an expert in kind of oil issues. And he just issued a report that has this, I mean, he's trying to put the current crisis in a perspective of how, whether Venezuela could adjust some of its oil or make adjustments in terms of the cash flows to kind of avoid some of the inflation that may come as a result of the huge deficits they are running. So one of the things that you see that, I mean, this is 98, 2013, but I think if you compare this perspective 2005 to today, Venezuela versus the rest of other Latin American economies is even more dramatic. So you have much more inflation. So the recent years in terms of inflation puts Venezuela today maybe, right now maybe 200% a year. But there's price controls and people can't find food. So people make some estimates, maybe it's 1,000%. I don't know how good those numbers are, but there's certainly the idea that inflation is pretty high in Venezuela today, and then the economy is also contracting.
So be careful with inflation of Argentina. This is not the inflation on average of Argentina.
No, right. Yeah, so maybe similar, yeah, correct. Yeah, right. So let's look at from 2005. This is kind of the proportion of exports that are oil or non-oil. So the blue line is the oil. And then this is the net oil exports. And so from 2005, what you see is that there has been a reverse of the process that happened before, that I emphasized before, is that now the economy has become even more dependent of the oil exports than before. And that, moreover, that in net, Venezuela, because this gives you an idea of kind of cash flows, on net, Venezuela has less barrels a day to cash in. And this is even more dramatic if you kind of decompose the amount of exports, net exports that are being transacted with cash. So in the oil days, everything that the Venezuelan company produced was basically 90% was sold in the U.S. market for cash. Today, I think it's less than 50%. The other parts are going to loan repayments to China and Russia. A lot of it is going to Cuba and Latin American economies that is either through very flexible payment arrangements, so it's not immediate cash. In the case of Cuba, is through reciprocity arrangements, where basically some of the Cuban doctors that are in Venezuela, maybe the military strategies or other personnel account for that, so it's not cash. Only about 700,000 barrels a day are being sold for cash in the U.S. And so in terms of the net cash flow, the drop in cash flow has reduced dramatically. And this is what's explaining. So on the other side, you have an economy that has relied very heavily on imports of goods. Domestic production is declining, the private sector is declining tremendously. You're relying on imports. The whole consumption boom in Venezuela was done through imports, but now you have much less currency to do those operations. And that's why, I guess that was the point of Ricardo Hausmann saying that there's an implicit default on consumers that now are not finding the goods in the shelves because there's not enough dollars. So something has to give. And so you wanted the so you wanted this picture in the other periods as well. But so this is the oil price, and I guess this is the deficits. And it's very interesting from 2005. So I show you the period before. Here you have 98 to 2005, up and down. There's nothing really systematic. But from 2006 on, pure deficits. And these deficits
20% of GDP?
Are huge, yes. Now these are estimates, right? There's a lot of guesses into here. But there were 11% before on the official numbers by the government, right, in 2011. So this really changes the kind of the graphs that I showed you before, where this part up and down, not big time. Okay, so this is one part that is happening, and interestingly, this is happening with a huge oil boom. Right, so the extent of kind of resource misallocation is so big that for the government, people estimate that for the government to break even, you need an oil price at $170. I think, I was always puzzled by those numbers. I think the official, I think they're sitting in some public offices, but if you look at the unemployment rate, it's something like 10, 12% or 8%. It's just it's not relevant. But it's not like people are really doing anything.
How are they financing these deficits? Oh, you haven't done that.
Yeah, I haven't done that. But so this is where I think now it's going to show up in money creation. So people that have, I haven't seen the numbers, but people say that the growth in money issuance has gone a lot.
In 2011, they were borrowing, essentially.
Yes. So, and some of the borrowing, so that part is also interesting because it has changed where they borrow from. So I think at around 2007, 2008, Venezuela sort of lost the capacity to kind of issue bonds and just borrow from international markets in the way that it was doing before. A lot of the sources of funding were from Iran, Russia, China, especially China, big time. But at some point, both Russia and China also figured out that they may not recoup this loan, so they changed the mode of financing through, especially China, through payments in oil. So it's so now some of this production that I showed you before, some of these net exports, part of it is going as a repayment of the loan. So they are loans that are made in exchange of oil.
As collateral.
Yes.
Collateral somehow.
Exactly. Yeah. And so that's also interesting. But the rest is coming from money issuance. Right, so those programs will not show up. So they're not in the statistics I showed you before because what I showed you is 2005, but they're not going to show up in the regular statistics of debt.
It's not debt and it's not deficit either.
Yes, correct. But somehow are affecting kind of these flows. Yeah, that's correct. But I think
what the accountants say that it should be what they are paying in oil should be taken out of the deficit, right?
yes. Yeah, and it will be good to appropriate it like that. I have to see whether I can get the complete data and then try to do this appropriation. Exactly.
Do you have then a plot of the real exchange rate that you can actually use to, for example, explain your previous chart? Like, for example, why is it that non-oil exports had declined so much?
So you mean for the previous to 2005 or now?
So what actually I am concerned with is, I would be concerned with whether it's been an issue of competitiveness or just government inefficiency. I mean, what explains this huge decline in non-oil exports? The obvious culprit would be an appreciation, right?
Yeah.
But there may be other things.
Yeah, so yeah, I don't have it here for the recent period, but essentially, yeah, they have maintained a fairly constant nominal exchange rate. So there is a little bit of uncompetitiveness that is going on, but you have to put this in perspective of everything else. So there has been huge expropriations of private enterprises. a lot of these expropriations have to do with distribution systems as well. So expropriations of in many sectors, but the sensitive sectors like distribution of food, for example, now the distribution of food is controlled 90% by the government, because the government perceived that somehow there was an economic war against the government, and that these private producers were kind of controlling the distribution system. So that has created a climate that just makes it very difficult to operate. So in addition to potentially competitiveness, just being in the private sector, it's not a good time to be in the private sector in Venezuela these days.
You do have 2 minutes.
Okay. No, I'm done. The last, I guess the last thing I wanted to, I talked before about reserves of oil. So this is the reserves, proven reserves in billions of barrels. You see how the reserves were very high, but have reached levels that are tremendous. And some of these reserves are actually a lot more profitable than the oil that is being extracted in the traditional places. But yet, really Venezuela hasn't tapped into this potential because of the constraints I mentioned before. But tapping into here is not something that's going to take a year. So Venezuela could do things to mitigate some of these, cash flow issues, but it will take a few years and it will take a lot of investment to really tap into that. This is the really last thing. If I show you the debt from the public sector that didn't include PDVSA, this is the oil company. And I said that PDVSA in the latest period has been used as the company to kind of do social programs and do all kinds of things other than produce and distribute oil. I think in 2005, the debt in PDVSA was about $2 billion. And, and the kind of the best numbers people have for today would be that it's above 80 billion. So this is a huge increase in debt for this company. Which is not only affecting operation, but is doing all kinds of things. So it's not just public debt, but these companies are also being used to tap in. And then for the later period, so 2005, it looks fairly flat relative to the later periods. And there is no numbers for starting in February, but people given the numbers in February and the annual inflation given those two first months will be about 160%, and people think that this, that this has gone out of control. Okay, so I'll stop here.
I have a question about your previous graph. Is PDVSA lending to the government, or what is PDVSA doing with that amount of money?
It's doing a lot of the social programs are being run. Yes, they have the biggest one is something called PDVAL. And it's a kind of a set of supermarket stores for subsidized basic goods.